of March. Happy Friday, everybody. Good morning, Fauna. Good morning. Jan, what's happening? Tago, good morning. Hang on one second. All right. Tron in the house. Chris, what's happening? Good morning. Good morning. All right. Fauna, already pressed the button. There you go. Thank you very much. We got 4 likes already. Off to a good start. Let's kick things off with the risk disclaimer. We understand there's risk in trading. Please don't always use trade capital only. Do not trade with money you can't afford to lose. Whether you're trading stocks, options, futures, forex, cryptocurrencies, you know the risks. Let me start out with a little public service announcement this morning. If you ever, I've said this before, I'm going to keep saying this. I will never reach out to you personally for any type of direct message. Okay, I'm not going to reach out to you on Facebook. I'm not going to reach out to you on Instagram. I'm not going to reach out to you on any social media platform first, to you directly, right? If you message me, I will respond, but I will not reach out to you. So anything that looks like, Chris, are you talking to me? Are you messaging me? No, it's probably a scam. So as an example, there is a scammer that perpetually pops up and people keep emailing about it or messaging me about it. It's on Instagram, and it is a clone or a scam, real Chris Pulver _ That is fake. If you would do me a favor, for everyone that is watching, listening, if you go to this, report this account, please, right? It looks like mine, but it's not mine. The underscore, hyphens, crap like that gives it away. It is fake, all right? So please flag it, alert it, report it right here. Block, restrict, report, anything. Scam. Okay, let's see. Report, post, message, comment, report, account. And pretending to be someone else. There you go. It's pretending to be me. Okay, or someone I know. Submit report. Get the underscores, get the scammers out of there. Okay, so do me a favor and just understand, look, anybody that reaches out and says, I've got this great opportunity, it's probably crap, right? So don't fall for it. I feel terrible when I hear, horror stories of, I thought it was you, and it's like, why would I ever ask that? So please use common sense. Don't fall for stuff like this and report them. And the more reports and blocks we have, the quicker these stupid accounts can get taken offline. Okay. All right. Thank you. Now let's move on to the charts. What you see here, this is something we talked about this week in the trading rooms. The S&P 500 from 2018 to 19 to present. So what you have on your chart, or what you see on the screen here, this is the current pace in blue. This is what our S&P has been looking like recently, okay, for this year. Now, the gold line in the background was the kind of shadowed forecasting from March 2018 to February 2019. And what we had is we had a relief rally before we had a drop. Now, this is completely a coin flip because next week on Wednesday, we have the FOMC rate decision. If we take a look at our Fed tool here, okay, let's look at our Fed tool. It's like a 99% probability that the Fed's going to raise rates to 25 basis points next week. Right here, it is either a 3.1% chance that they don't raise rates, or it's a 96.9% chance they will, and they raise it by 25 basis points. Okay, so we should have a rate hike next week by the Fed, and then we will see how many rate hikes they're talking about for the remainder of the year. They will probably be very calculated with their language and the statement and the press conference with they're monitoring the situation in Russia, Ukraine. They're monitoring everything with inflation, blah, blah, blah. That's what the Fed's going to have to say, right? But what we're trying to take away from the statement in the press conference is, are they giving explicit details to how much they anticipate raising rates? Are the Feds all in alignment? Like the Fed speakers and members, are they in alignment to raise rates X amount of times for the rest of the year, give the market something to price in? And on that, let's say that's where the narrative comes in. Somewhere on that little spectrum is going to be the market digesting it, saying, okay, I think the Fed is more hawkish or the Fed is more bearish or dovish. We're not sure yet, right? That it's completely neutral. And this week, analysis-wise in the trading rooms, we talked about a lot of indecision. There's a lot of indecision in stocks right now after a crazy beat up in some of the tech stocks and the growth stocks. They've been hit really, really hard. Now, I'm going to show you this chart. This one's nice and clean. We discussed this in Equities on Demand this week and in Flex. Why am I showing you this one chart? Because I think this has a lot to do with how we have risk appetite or risk aversion going into the next couple of weeks. One thing I'll make a note of, March 15 to May 31. This is where I'm looking for what I call the pre-summer push, right? This typically to me, now it doesn't have to be in one direction, but this means to me that the markets try to move. So we typically have really solid trends, we have breakouts, we have increased volatility, right? And I'm talking about the type of volatility where day-to-day trading ranges, day-to-day price action is a little bit higher volume than usual and a little bit higher in price action than usual. That's good. Okay, that gives us opportunity as traders. Trends, breakouts. When we have been looking at charts with indecision, channels, boxes, and we don't see price breaking out, this is what we're looking for. Okay, I'll show you a handful of charts today that this is what I'm watching over the next week, especially with the Fed. Does the Fed give the market enough information to open up the floodgates, let price confirm breakouts above or below? We will find out, right? But from middle of March into the end of May, typically there is a bullish bias, all right? And this could be a recovery. Now, if we look at this chart, this is the S&P 500 or the SPY. And what I would look for is, and look, like I said, this could be a complete coin flip. The path of least resistance recently has been, fade the rally, fade the rally, fade the rally. So the market may just continue to drop, and we continue to have this corrective level until, maybe it's a 20% correction, maybe it's a 25, 30% correction. Maybe this comes all the way back to past resistance, becoming future support, and we're talking about a drop. I guess percentage-wise, that should be around 30%. I will check that right here. If that drops all the way back down to 350 or so, that percentage drop on the SPY would be right in here. That'd be about a 25 to 29.5% correction. So, you cross that 20% threshold, we're talking bear market, we're talking recession. I don't know if the Fed can really avoid that. I guess the question is the Fed going to slow the probability of a recession, or do we have a recession that still has bullish stocks? It's happened before. We've had a contractual or contracting GDP that is a technical recession, but yet stocks end up producing higher highs or producing gains over the foreseeable future. So it really is like there's a lot riding on the FOMC, and I know it's really frustrating and annoying. Like I've been very perturbed watching how indecisive the Fed has been and how, it's very difficult to really put a concrete answer to what are they doing. Are they raising rates? Yes, probably. By how much? We don't know. How often for this year? We don't know. And being kind of left in the dark you can see that translated into the market in indecision. All right, so let's talk about this. On the SPY, this is what I'm looking for. If the Fed is going to kind of fall in line with this historical probability of a pre-summer push, we get through March, we get into April, May, the market's looking for anything it can grab onto to push bullish. That comes back to this chart right here. All right, and that would be this relief rally. If we have a relief rally, I see it being short term. But where would that push the SPY? We go back to this chart, it would push the SPY up to around 450. Let's go back to this chart a little bit cleaner. It'd push it back to these high. So this high is 458. This high right here is 457. So I just told traders this week, if we have a relief rally on the SPY back to 450 to 460, great. Percentage wise, that would be a decent little rally. So let's say we start it now, which pre-market is up today. Let me zoom in here. I'm just looking for a percentage. So if we go from 428 to 455, let's see what that is on a percentage basis. So let's start from today's pre-market open. If we get to these equal highs, that's about a 6.7% rally, right? Now, does that happen over, a couple of weeks? Maybe it's a 0.5% a day, 0.75%, 1% a day. Maybe it's a percent a day. I don't know. But how fast and furious does it get there? And from there, I'm interested in shorting. So I'm looking for this potential resistance and this potential resistance. So we either pull back to some type of head and shoulders pattern, and this would be the right shoulder being established, or we pull back to a double top and we short the double top. And then we have more of a range or possibly even a double top pattern that becomes way worse to the downside. Okay. So again, I'm not saying that there's going to have to be a bottom. I don't know if the Fed has what it takes to really push the market bullish, but I do think that inherently the pre-summer push is a bullish move. All right. And if the market's doing everything in its power to relief rally, it may not take out the highs. It may not do any type of real bullish overtake, but we can push up to a level that like everyone's smiling for a second. And from there, I think this is very vulnerable to more downside because this low to me is a structural pattern. And we also broke this larger trend line. This has a bear crown written all over it. And a bear crown is once we get a right tip, we sell that. If it pulls back and evolves into a double top, I would sell that. All right. So I will put an arrow. Let me put a blue line right here, make it a little bit thicker. Something like this. I'm looking to sell that move. I'm looking to sell that move. But of course, if we get a rally first, that's great. I hope that's enough to have like a tech recovery in the near term, and I can lose some of my stocks with covered calls that we've been, repairing over the last couple of weeks. And if that's the case, great. We'll take some tech, tech cash essentially, because we started dipping our toes in off some lows, and enjoy it. And then we focus on, what we need to continue to buy and play through the rest of the year. Right? So, question for everybody out there: does this make sense? This is what I'm watching for next week. This is the type of price action I'm going to be watching. Now, if I'm totally wrong and there is no rally and the market just continues to unwind, well, guess what? More pain ahead, more bear slides, more corrections, right? We can see this playing out in a larger channel. Let me change the color. Something like this. See it playing out in a channel like so. The bears might come right back down to score a point. Bulls pop it up. Bears come down, score a point, pop it up. I mean, we have this potential volatile corrective channel until the market is ready to base. And maybe the base takes time and consolidates. And then we see if this is, ready to build a foundation and then make its way back up. This type of recovery, if we go into like a full-on recession, this type of recovery could take 1, 2, 3 years. Right? And I don't think that, right now we've had this spoiled volatility where everything goes up and everyone just is assuming that like the market's got to be bullish. It could take years to do that again. It could take years for some of these tech prices to recover from these crazy highs in a 50, 60, 70% drop. Because you look at the sheer numbers it takes to get back to those highs. You're talking 100, 200% gains to get back to those highs. That's astounding. Right? So it could take years to overtake some of these highs we've seen from 2021, especially in tech. All right. So there's, like I said, there's a lot riding on this for next week and how the market's going to digest all the information from the Fed. And possibly, I think that a pre-summer push is where a lot of volatility exists. I think we're looking for trends and breakouts. I am very neutral on a lot of stocks and neutral on a lot of currencies. And that being said, I want to trade accordingly. So if we start to get wide open breakouts, I'm looking to trade them. Case in point, we are seeing pairs. I'm trying to think off the top of my head. I know we have like CAD yen. CAD yen has been indecisive. We're at 91.95 today. Now, it's really interesting where we are. The reason why is we have come back to this high so many times that I wouldn't be surprised if today we hit the resistance level and we fail going into next week, right? Or this is a breakout opportunity where next week, even in the wake of the Fed, this might be a breakout above this area. And if it's going to stay there, we look for a bull flag and we go with that. If we're going to reverse it, then we put a stop loss in this little, this recent breakout, and we reverse the position back down to the lows, right? Like a lot of these are going to be breakouts or fake outs, and that's what we have to trade. Okay. So CAD yen is a potential breakout or fake out. CAD Swiss. I've been watching this one for a while. The last 3 days on the CAD Swiss have been excellent to the upside, and we are long in this in the flex room, and I'm long all the way back up to these highs around 7,500. Okay, and also we've seen a lot of correction like so. So is this bullish movement and a little bit of a correction and pause, is this enough to get back up to 73.50? Is this enough to have a symmetrical push towards 74.50 up to these highs at 7,500? I'm taking profit up here, so I hope it is, right? I hope this is starting to show us that we have a nice little push. So in general, let's go to our currency strength chart for today. Let me refresh this. Okay, so today we have yen, Aussie, New Zealand on the bottom. We have euro, dollar, pound. Really, the standout currency for today is the CAD. The CAD is the strongest. We've had some reasonable volatility intraday, all starting around midnight. So you can see that the JPY, the Aussie, starting to move a little bit more during that midnight to 1. That's late Asia session. And then London session, more to the downside on Aussie and New Zealand. But the CAD coming back. I'd like to see a little bit more separation on the Euro and Swiss, but we've had a great run so far in the Euro Swiss. I think I have this one labeled. If anybody subscribed to my Pulver Report newsletter, we do have these kind of scale-in levels on the Euro Swiss, and look at where we are. if we had a buy at 104, 103, 102, 101 parity, all those get filled. Guess what? You're not that far away from seeing an excellent run back up to these highs. That is a huge chunk of profit. And I hope that anyone that followed along with this trade is going to get paid on the Euro Swiss and maybe more. Okay. All right. So let me talk about a few other kind of range bound pairs. We've been watching dollar CAD, right? Dollar CAD. I am going to get, well, I'm not stopped out yet. I have a break even around 26.95, which is plus 30. I wanted to eliminate some risk and see if this would keep running. We got up to the highs just shy of 2,900. So unfortunately, the dollar CAD didn't even touch the highs at 29.50. We certainly didn't touch 3,000. I don't think this trade is done necessarily. We have this low, we have this low, we have this low. I still think that we stay supportive off of this, 24.50 major support. As long as that doesn't break, I'm still looking for this to potentially bounce once again back up and maybe even continue this channel higher. So, we might have a chance to reload. If I get stopped out at plus 30 on the dollar CAD, we might take a chance to reload and put a stop loss below 24.50 and see if it jumps right back up next week or beyond. So why is the CAD running? Is oil back up today? I don't think it is. We had a crazy volatile week on oil this trading. Yeah, no, not even close. So I guess 8:30 news on the CAD, that's would have been the jump, right? They had employment news this morning. So it would have been today's employment news on the CAD. Came in way higher than expected, almost 3 times. They forecasted 132, came in 356. 6.2 unemployment rate came in 5.5. So big jump near term in the CAD. Okay, fine. But oil, which is a big correlator with the CAD, is back down to 106. Look at the daily candle, right? Massive red candle. This was a big bearish engulfing candle, and we're down even from yesterday's trading on oil. So oil has taken a little bit of a breather, which is kind of nice to see. We've seen some energy stocks retreat as well. Yesterday was kind of a difficult day. If we look at the SPY, okay, yesterday was a large gap up. We ended up finishing bullish on the day, but we did leave. No, I take that back. 2 days ago, we had that big gap higher, and it stayed green. But we're just slowly inching our way back down into this green box, which I have representing the gap from Tuesday to Wednesday to Thursday. We still have some gap pricing that we could end up filling. So I wouldn't be surprised if today, pre-market is up right here by about $3 and change. So if we gap higher, do we fill, and then still have a bullish push? We still have a weekly pivot up a little bit higher. We haven't done any structural changes above this recent high or below this recent low. So we're still trading a lot inside of this volatility in the stock market right now. So that is the SPY. We had the Dow mixed as well, kind of an inside gap candle. We had the Qs, inside gap candles. Again, even though the Qs were very close to testing those lows, we didn't test them. Or I should say we didn't break them or breach them. Same thing here at the recent high. We didn't break them or breach them. So more inside candle trading on the Qs for right now. Volatility, mixed. I was looking at the instruments, the VIXM, the VIX, the VIXY, SVXY. They're all over the place. They're actually not, they're not all bearish or all bullish. It's pretty mixed right now. So taking a look at some of those volatility instruments that I play. I have an expiration out to next week. Pre-market VIXM is 34.40. I'm sorry. Close yesterday was 34.47, but pre-market's 33.83. I will lose the stock at 34 and above next Friday. If we're back down below that, I'm just going to lower the cost and try to do another covered call. Lower my cost by another, maybe $1 or so, and I'll still end up making more money at the same price. SVXY. This is one that I honestly wouldn't mind if traders are interested in just straight up buying this as an instrument. You buy the SVXY around $49. I don't think this is a very difficult trade to get up to, let's say $52 to $53 over the next few weeks. So even going after like a $3 to $4 move would be, I think, very doable. Okay. Let's see, $60 oil today on Bloomberg. Whatever, man. I mean, like, what was it last week? Oil's going to $150 to $200, and this week it's saying $60. It's like, I'm telling you, if you look at headlines, you're going to see complete opposite headlines throughout the same trading day. I don't watch that stuff. Honestly, the best news that I get is a StockTwit newsletter every day and Morning Brew newsletter every morning. That to me keeps me informed enough to big picture, macro stuff, anything that's pressing, super mainstream, but also like pretty factual, matter of fact. I would rather have that than headlines that are just trying to be eye catchers, so you click on it. I mean, because they're everywhere. It's like world is ending, everything's bullish, right? Super wealthy, super poor. I mean, there is no middle ground on anything. Everything is like one extreme, the other extreme, and people just kind of gravitate towards whatever they click on. Like I said, I just try to stick to the matter of fact stuff and watch the charts. But yeah, you're gonna see it. You're gonna see, like, if we bounce off $100 and start going bullish, you're gonna see the same report on Bloomberg says oil's going back to 150. You know, so we'll find out. But what would be interesting is if oil does in fact drop below $100, all this crazy wild run, like the energy stocks have done extremely well, commodities have done extremely well. Guess what? They're going to pause for a second. They're going to correct. So it does show that charts behave. Because if you look at nickel, for example, where we have nickel futures and nickel spot, trying to think, there was there was a fund that was upside down like $8 billion on nickel, and they're still holding their position. This is nickel. It halted trading. The London Metal Exchange this week, the London Metals Exchange, the LME, they halted trading on nickel for this exact reason. Because one major short seller was just getting crushed, and they're upside down like $8 billion, and they're still trying to short it to get out of their position. But halting trading at least allowed them to kind of freeze. But this, I mean, this is insane, right? I mean, you're looking at this for 1, 2, 3, 4, 5. I mean, this just intraday. That day is nuts. 73% on the day. In 2 days' time, it's up over 112%. This is why short sellers, I mean, it's like the most rigged game in the world. If short sellers are getting crushed like this, and they halt trading, and somehow these short sellers can recover. It's like the CYA trade, right? If they if that fund can get out of this trade with this stock or this instrument going back down, it is really frustrating, because that doesn't happen to a retail trader. If a retail trader's over leveraged right here to the point of blowing up your account, guess what happens? You blow up your account and you got to start over with your own money. That's what sucks. So that's why short sellers, it's just a crazy situation. But nickel is crazy. Wheat, same thing. I'm just looking at straight up CFDs. Wheat went up very aggressively. This is where everything was going to. We're talking about this in the trading rooms. I'm like, these charts seem broken, right? This was a huge move, up 70% on wheat, and then they pulled back. You're seeing some balance. Take a look at gold. Gold, nice little rally here recently. I think it was like about 10% off these lows. 15.5% on gold, and we've pulled back a little bit. So again, showing some realistic trading, some waves. Same thing on silver. Really nice rally up here, a little bit of a pullback. You can look at corn. So a cash CFD or a corn fund, doesn't really matter. Corn is still up and elevated. I actually got long on the instrument CORN, not the CFD, but this one here. This Teucrium, I guess, Teucrium corn fund. I'm long in this one with a couple of credit spreads and staggered out, so this one's doing okay. We've had uranium go crazy. So uranium energy, I'm looking for a CFD if I can get it. Uranium futures, is there anything for CFD? CFD. Global X uranium ETF. Energy Core. Let's just see what this is. URA. All right. So another one that's fairly inexpensive and probably an instrument that I would continue to look to trade. So I think that commodities in general and energy is going to be pretty sticky and still remain bullish and elevated unless we really see a dramatic decrease in inflation. I know the CPI came out yesterday and it was still as expected, like 0.8 I think it was 0.8% yesterday for the U.S. and that shows our measurement still around like 7+%, 8+%. That's real. That's like weighted weighted inflation. Real inflation is probably 10 to 12+%. And obviously the things that stick out is like gas prices. We hit I think a new 40-year high in gas. But interesting fact. So based on car technology, miles per gallon, stuff like that, our gas prices are actually cheaper now than they were back in the 80s. Even though it's like, well, we're paying $4.17 and it was, a dollar something back in the 80s. But based on what cars got per gallon technology, it's actually still about half the price. It still seems expensive because we've crossed an all-time high or 40-year high or whatever. 410 was like the highest average gas price in the country, and it's 417. Talk to traders this week that aren't U.S. citizens, and there's $9 a gallon or whatever in Europe. It's like $8 or $9 a gallon in Canada. But they measure by liter, and it's priced in euros. So we just did the conversions this week, and it's still twice as expensive. And everyone's in the U.S. is complaining, right? So anyway, let's move on. So taking a look at a little bit of everything, bullish pre-market today. So we'll see how that plays out. That's a good thing. Obviously, I'm always happy with a pre-market that's up and it stays that way. Next week is the FOMC on Wednesday. How many of you are interested? I said this week in my trading room. How many of you are interested in trading with me live on YouTube on Wednesday next week? So if I go to the calendar here, next week, Wednesday the 16th, would you like to do a session with me around 2 p.m. Eastern time? Type in a wire yes in the chat if you want to do that. I can set it up next week when I book my 9 a.m. Monday, 9 a.m. Friday. I'll book also a Wednesday 2 p.m. So same thing like you joined me here. I'll just push the stream at 2 p.m. Eastern time, and we'll see what the FOMC and the Fed give us, and we'll try to make some decisions together. Okay, cool. All right, we'll do that. So look for that in the upcoming live streams, and we'll do a Monday, Wednesday, and Friday next week on the YouTube channel. Good stuff. All right, and it will be recorded. It'll be posted to my channel. So I always do like the live session archive. You can find it inside my channel on youtube.com/Chris Pulver. Okay. All right. Cool beans. All right. Any instruments that you'd like to see? My to-do list today, based on my expirations in the stocks and options world. So I have KHC. And again, today with pre-market, maybe everything gets a little bit of a bump. So KHC, it's trading at 37.66. I have a covered call at $41. I'm just going to continue to look to repair that over the next couple of weeks. I doubt we're getting to 41 today. PLTR pre-market's 11.98. I have a covered call at $12 and another one at $12.50. If price is above $12 today on PLTR, I'm going to lose it, and that's okay. My break even on this stock, if I lose it at $12. Oh, hey there, tiny little chart. Hang on a second. Let me find. I need to find the zoom on here. There we go. It's like my eyes are good, but they're not that good, thanks to corrective lenses. PLTR. So I own it at $10.95. So I wasn't looking for anything crazy, but if I get the stock called away at $12 minus the $10.95 break even, I'm in 200 shares. I will flip PLTR to a $210 profit. So hopefully I'm cheering it on. $12 would be great. If I lose it at $12.50 for another batch of accounts, $12.50 minus the $10.95 times I'm in 1,000 shares, that'd be $1,550. So no complaints. If it gets to $12 or $12.50 today, I'll repair that trade and get it off the list. Next up, I've got an expiration on PayPal. I'll just keep repairing that one. SLB, this would be another one that it's an energy play. We're up to $40 and change. I think from this one, traders that are in my Equities on Demand group, I like SLB quite a bit. I don't mind owning it, but I'm going to switch gears to probably CTRA and some of the other ones that are energy focused but a little bit cheaper, like Halliburton still in the 30s, CTRA is in the 20s, Baker Hughes is in the 20s. Okay, so like Baker Hughes is trading at 35 and change. We've had this crazy big run on Baker Hughes. CTRA, another one. Nice run to the upside, but it's trading mid 20s. SLB, I'm not saying it's expensive, like all things considered, but if I'm going to take ownership and, tie up some cash and margin, I'd rather tie it up at $25 than I would at $42, and there is a chance this week. So 42.93, I have a 42.50 call and a $43 call. So I will be watching this one today. If I lose this stock, this is actually going to be a really nice profit on SLB. A couple of break evens here. Let me find it. SLB, where are you? SLB. So my break even's 35.10, and if I lose it at 42.50, so 35.10 minus 42.50, if I lose it there and I'm in 100 shares, I turn around and make $740 on the stock. It's the same. It's about the same break even here. 35.10 minus 42.50. Actually, no, $43 on that Interactive Brokers account I have. That's $7.90, and I'm in 1,000 shares. That'd be a nice chunk of profit for a bunch of accounts. So again, for a little bit of a credit spreads, ownership, and then flip it around for a couple bucks per share, make $8,000 on SLB. I'll be really happy with that. So possibly, losing the stock this week, no complaints. If it gets to 42.50, stays above it, $43, I lose it, and I'll continue to repair it and hopefully get it called away for, a nice chunk of profit. Other ones I have CPB, Campbell Soup. I'm going to make a decision on this one today. So market's opening right now 41.97, and I've got class at 10 o'clock with Equities on Demand. We're going to assess this one from the long put side because I don't mind owning CPB, but I do want to see, perhaps this does get pushed down a little bit today. If this gets pushed down a little bit today, let's cash in that long put as low as possible, and then we can turn around and try to repair this and lower our cost. So if I did it right now, I have the 46 by 45, if I'm not mistaken. So CPB right here, the 46 by 45, we're trading at 41.97. So I should be able to grab about $3 out of this long put from our break even. So we took 45 cents out of the trade. I would do a $46 assignment minus the 45 cents minus, let's say, $3. I'm going to own the stock at 42.55 and it's trading right now at 41.97. So, again, a little bit of repair is needed. I need price to rally about 50 to 60 cents to get break even. I would try to lose it back up here around 46 bucks if possible. Otherwise, we lower our costs with a covered call out to next week or the week after. Maybe even look at some earnings into April or May on CPB in the next 30 to 60 days. All right. And then lastly, we have a couple more that we talked about yesterday in class for Equities Demand. Deutsche Bank 1077. Covered call is going to be collecting some profit on that or lowering the cost basis of any owned shares. And then we have Triple D and Under Armour as well that some students had. I have a lot of 318 expirations. So coming into next week's trading, a lot of expirations on Friday. That's a big list between covered calls, credit spreads. I can show you right here. In fact, we've got it all highlighted. Everything you see highlighted with 318. This is a credit spread. This is a credit spread and a Jade Lizard combination. That's a credit spread. We already took profit on LPI, which was fine. We took over half the profit on that one. Corn is a credit spread on that ETF. DBC, same thing. DBB, I went a little bit further. SoFi credit spread, SLB, CTRA, United States Steel, which I want to check those really quickly. Some staggered ones on United States Steel and CLF. So CLF trading at 25.61. United States Steel trading at 32.48. Credit spreads are looking good to the upside. We took a huge chunk of profit. I showed traders this week between United States Steel, X, and CLF, Cleveland Cliffs. Just on one account of mine, I made about 20 grand in the last 8 months on those two stocks. We worked them hard. We would take trades, let go for profit, take some trades, let go for profit, take trades. I mean, we just kept buying those dips and using credit spreads, taking ownership, and that stock has been very, very good for us. And what's crazy is we made a lot of money on a stock that really didn't do much. But that's the beauty of having it consolidate and the beauty of knowing this is a value play that should pay out nicely. And, did we have any control over what happened today with commodity prices and steel this year in Russia, Ukraine? Not at all. But technically speaking, this is a great trade that we wanted to participate in, and it worked out really nicely. All right. Let's take a look at some currencies. I got some requests, so let's go. Euro Aussie. All right, Oliver, I'll take a look at those. We'll flash through them. So Euro Aussie. Couple things on these Euro pairs, right? I've talked about a potential reversal on the Euro pairs, but to be very cautious. If traders this week have been bullish on the euro, I'm hoping that you were protecting profit. If you were bullish on the euro this week and it came right back to that weekly pivot, which, by the way, that was such a freaking easy trade. Now that I see this, I should have just bought the damn euro. In all honesty, it was the reason why is I got back late on Friday. It would have been trading on Sunday, like first thing when the market opened Sunday night for me. But we had 1, 2, 3, 4 weekly pivots in a row. What an amazing alignment that is, and what an easy trade. So, I mean, honestly, I fudged that trade up big time. That was an easy trade off this, again, get in either Friday end of day or Sunday when the market opens, and that was a 400 pip rally. oh, man, I really missed an opportunity there. But anyway, so what I was talking about this week in Flex was, we've had this really aggressive flush down. If we have a recovery, we may have a cup and handle reversal pattern. Okay? But don't trade this without confirmation and don't trade without a stop loss, because if this is a recovery, great. But this could also be coming right back into this past support becoming resistance, and this heads right back down to those lows again. Remember, this thing just dropped around 1,600 pips, and all this was a bit of a relief rally and a pullback. So if the bears remain in control, then we'll just see it flush back down. But what I talked about was because we had these really aggressive flushes on the euro pairs and we had this relief rally this week. If we have a cup and handle rally, there's a chunk that we can trade or possibly a trend line break where we can start buying that higher low. We have to kind of wait and see how this plays out. So looking for a trend line, probably wait until next week on this one to make a decision. But man, I really should have just taken that stupid trade. I'm really mad that I didn't take that trade. I got a nice trade on the Euro CAD though. Euro CAD very similar. We had 2 weekly pivots in a row. We had a buy trade at 4,000 and a buy trade at 3850. Those worked out really nicely. We came all the way back to 4,100 plus. We came, in fact, all the way to 4,200 plus. I ended up taking profit around 4,150. So it was like 400 pips we cleared on that one. Nice trade. Euro Swiss, I've been buying all the way back down to parity, and so far that's looking like the right answer. So if it's all the way down here on the slide, I'm looking to see, does this consolidate a little bit, and then the Euro Swiss heads back up to these highs and finds that yearly pivot at 106 plus. I hope that is the case because I want to stack some orders and I want to stay long in the Euro Swiss and I want to take it back to this pocket. I want to take it back to that price gap and that yearly pivot. So come on, Euro Swiss, don't let me down. All right. All right, I'll keep going through your list there. Euro CAD, we're good. Euro Aussie, we're good. Aussie dollar. Aussie dollar is one of those very indecisive pairs that I'm not going to trade until probably after FOMC. So we came back up and tagged the yearly pivot. I'll go to the daily time frame here. We tagged the yearly pivot, and I think this is a bit of a toss-up trade. Okay, we could either break higher, and that's obviously going to break the channel and go up. That'd be dollar weakness going into next week, or this is in a perfect position to hit channel resistance and then push back down to retest lows on dollar strength if the Fed is going to raise rates, if the market's like, oh, here we go, dollar's going to get stronger. So perhaps the little commodity rally is taking a breather and maybe done for the near term, and the dollar's going to get stronger. Okay, my only hesitation on the downward direction is that if the dollar gets stronger, that usually spells bearish in the stock market. I think the stock market's going to try everything in its power to glean some positive information and have some optimism to try to get some type of relief rally. I don't know. We'll find out. But again, lots of indecision on these dollar crosses, but Aussie dollar, I'm standing on the sidelines until probably during or after FOMC. Okay, and then Aussie yen, same thing. There's a large rising wedge. You can see it on my chart. So I'm looking to short the Aussie yen. This high, this area here around 8,700. I'm looking to short that Aussie yen back down to these structure levels. So I'm just going to trade range high to range low, trade that rising wedge. If we have a bearish move in the stock market, this has a lot more room to come all the way back down to where it started. But I'm just going to short inside the rising wedge for right now. Okay, Swiss yen I saw was pushing up a little bit higher. The structure is still really, crappy. I'm still going to sell it at 127. I'm looking for a break below 124. We get a break below 124. I think we open up the move back down to this pocket and these lows around 118. And this is where I'm going to make some good profits. But I have to see that close below 124 first. I'm just going through the list here. CAD Swiss Tron, we're good on CAD Swiss. Yeah, we did that one early this morning. CAD Swiss is looking great to the upside. 73.39. I'm hoping that this is going to, officially break either this corrective structure or this is going to break these highs around 70, let's say around 73.80. I mean, if we have a break, retest, go, let's get above 73.75 or so, and then hopefully set our sights and destinations on 7,500. I'm looking to take some profit here between 7,450 and 7,500. That's my window. All right, good stuff. Okay, next up, CAD Swiss, we're good. Pound Swiss Tron, okay, we'll take a look at that. Pound Swiss, play the channel. Here is, I'll copy this. Play the channel. So connect the lows, watching carefully. If we see a nice little rally against the Swiss, Pound Swiss can come back up to 25. We break 25. I'm really bullish on Pound Swiss back to this pocket, back to this 1.30 high. Okay. Baidu crossing 132. Is that high or low? Hopefully that's probably a low. Baidu is probably crossing a low. I'll go back to the currencies in just a second, but Baidu is pushing lower. You piece of crap. All right. My break even on Baidu is 141. I don't have this one assigned officially until next week, but I've already closed out my long put. So anyway. All right. Good on Pound Swiss. Yes. We'll take a look at cryptos, Peck. Sure. Let's see. Double check. Right side of the chart resizes automatically. Awesome. Yep. Dollar Swiss. Yeah, sure. Dollar Swiss. Dollar Swiss, and we'll do some cryptos. Dollar Swiss, 93.22. Let's freaking go. Right? I need the air horn. Pew, 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 pew. Let's get to 93.50 and go. So again, if you follow my newsletter, we had this dollar Swiss surrounded. I'm buying dips with these levels. I'm buying breakouts with these levels. I am bullish on dollar Swiss all the way to 9,600. So again, going into FOMC next week, is this dollar Swiss going to break this high? Right? If it breaks the high, let's go, man. We've only been waiting for months to get this thing to take off. There's your symmetry swing. This is your projected symmetry move right there. Okay, all this is just noise that we've been accumulating. So it's been a good trade, right? I mean, we took a huge chunk of profit here, reloaded, took some profit, reloaded, took some profit. I mean, we've been in and out of the dollar Swiss many times, but I'm still holding my base position for that trade to 96 plus. I really hope we just get it. I hope that pre-summer push comes. Let's go. Weaker Swiss across the board would be an excellent trade. Okay, Aussie yen, we just did that one, Andrew. Andrew, looking at Aussie yen. I meant Aussie yen, sorry. Aussie yen is a rising wedge. The way that I see it's right here. So I'm interested in the Aussie yen as a potential short if we hit this resistance. So we score a point above this high. I'm going to look to fade that move back down to the rising wedge lows and just kind of stay inside this right now, right? But if I sell it high, that should be worth about 300 to 400 pips. That's my Aussie yen. We're good on dollar Swiss. Wayne, yes, dollar Swiss looking good. The big breakout on dollar Swiss is 93.50. We've got to break above 93.50. I'm tempted to take some profit right now, but I'm not going to. The reason why is because I took a big chunk of profit maybe a month or so ago, and I've leveled myself back in. I'm going to check and see. I am in right now. I'm in 7 orders again on the dollar Swiss, but my trade size isn't as big as it once was. So I had those stacked orders higher. I had those pullback orders lower, and I'm going to see what I get for next week. If we break above 93.50, I'm going to keep stacking those orders up all the way towards 9,600, and I'm going to try to make that win as big as possible. Ride out that, CAD Swiss as well. Hopefully Euro Swiss. I took profit this week on the Aussie Swiss as well as the New Zealand Swiss, and those worked out really nicely. So for the profits this week, I've got 212 on one account, and I have 212 plus 427. So 212 plus 427, and then I should have one more. 148. So I closed about 787 pips this week. Pretty happy with that. And again, just a lot of it was trades we've already had running, buying low, nice runs on Aussie Swiss, New Zealand Swiss, Aussie CAD, New Zealand CAD. We closed out those last week for like over 1,000 pips. So we've had a nice little injection of profits and pips the last couple of weeks. And then in stocks, I'll see if I get some stocks called away today. Depends on what the market does overall. All right, let's take a look at some crypto. Let's see. Nuno's asking for pound CAD. Sure, let's take a look at that. Then we'll go to crypto. Pound CAD trading at 66.19. Okay, look, be careful on this pound CAD. And here's what I'm saying. I am happy to buy the pound CAD down here at 6,000. Okay. Now, this could be a complete fake out to the downside, and we'll know this more next week. So can everybody see that we have some support right here where price is at now? Now look at the last couple of weeks in dollar or pound CAD. This has been 3 straight weeks bearish. Let's take a look at the smaller time frame. Do we have any pivot alignments? Do we have any oversold conditions with divergence? Do we have pockets? Check all the above, right? We have a weekly pivot, monthly pivot cluster. I would say before I start getting super aggressive on saying, let's buy the pound CAD, look, wait for that trend line to break. If you want clear confirmation, wait for that trend line to break. I think that traders could take a chance on it. You could buy the pound CAD right here and have a stop loss maybe around 6,550 to 6,500. And if it goes up and breaks the trend line and then gives you a reversal pattern, awesome. Eliminate risk as you get it, or eliminate risk as you have profits go your way. But I think that if we break below 66, this instrument is potentially vulnerable to the downside. And I would rather be looking to sell. And I don't know if this is against the pound, because obviously, the news today was positive on the CAD, but I don't know if the pound is really going to get that much weaker. If it does, we'll take a look. Could the pound break below 66? Sure. Breaks below 66, comes back and retests, and then we trend down to these lows, and we might have a chance to trade, 600 pips or so to the downside, and then buy this thing at multi-year lows and buy this thing for a crazy rally to the upside. So if that's the case, I'd rather look for confirmation to sell and then buy it at super low levels and scale into it. The other option is because it's sitting at equal lows right now, we've got some pivot alignments and oversold conditions. Maybe we look at a short-term buy and we try to see if it breaks a trend line in the next week or so. If it breaks the trend line, bounces off this level, then sure, it's probably worth 300 to 400 pips to the upside, and just trade it back to a pocket or trade it back to a midpoint. Look at this 4-hour time frame in the swing. Let's say it goes 50%, right? Just take a fib. Take a fib level. Look at some of these percentages from this high to low. If we go high to low right there, that pulled back to a 30% level. We retested the lows. This could come back into the 1.8 and the 1.27 extension. Now, that to me, as long as this level holds, which is right in here, we have to hold this support, and we could look for a bounce right back up towards this area or this area, which would be somewhere between 300 and 400 pips. But that trade to me would require a stop loss. I wouldn't want to scale into the pound CAD. I know that I trade small a lot of times, and I can say, well, I'll buy it at 66 and 65 and 64 and 63 and 62. But why would I do that if I could just sell it and make money on the way down and then buy it much lower? Okay, that's my pound CAD. So potential buy trade, but it's going to have a stop loss, and I'd feel a lot better and a lot more comfortable if it bounces here. We can put a stop loss below recent low and then see it recover. So maybe a little bit of confirmation that the bulls are stepping in, or this thing is actually showing the signs of a support that we can take a trade. Okay. All right, let's go to a couple cryptos and I'll start wrapping things up. So Bitcoin. Bitcoin is still trading inside everything. Couple levels I'm watching closely. My chart alarm is set on Bitcoin at 34,430. So these recent lows, and also set at the highs at 45,940. Has Bitcoin broken any highs or lows recently? No, it has not. My concern on Bitcoin would be this high to low movement and that kind of overall downtrend. We potentially have, if you connect the highs and lows right here, we potentially have a swing to the downside and a correction that is still playing out. So that may spell more downside, maybe. All right. But we could also have high to low. This is a little bit of a correction in here, and we flush down one more time, find some round numbers, find some previous levels of support, find this trend line, and then we rally from there with a bottom pattern, right? But like I said, we've been watching this. It's like good day, bad day, good day, bad day. It's driving traders crazy, or I guess hodlers crazy, hodlers, whatever, yodelers. We haven't broken the highs, we haven't broken the lows. So I wait. I want to see where structure goes. I want to see when these chart alarms get activated. Ethereum, same thing. We haven't broken recent highs. We haven't broken recent lows. You can see my chart alarms. Litecoin, Solana, I had some alerts going off this morning. We could have a potential falling wedge setting up on this one. This is Litecoin. Litecoin looks actually pretty promising for a potential falling wedge. Okay, now what would this have to be? Well, there's going to be some more accumulation in here. But if we break out, that looks pretty good, right back up to these pivots and back to 160. We also have this weekly, monthly, and yearly pivot cluster back to 220. I mean, Litecoin looks pretty good for that's a 100% return if you're buying it now, and we've got pivots up here towards 220. That's over 100%. Okay. All right, some other ones, Litecoin, Solana, Cardano, all that good stuff. So Solana right here. Still have to break the trend line. We might be building a base, past resistance becomes support on Solana. Look for this one. So I'm going to set a chart alarm here. Looks like it expired on me, but maybe a bit of a falling wedge coming into past resistance and support around $58. If we build a base in there, nice little jump up to, that's back to the yearly pivot around 150. We have this weekly and monthly pivot cluster around 175. We could be looking for some big patterns back up to highs. Again, I don't know. I'm just seeing that on the charts. So I feel a lot better on the right-hand side of the trend line. Past resistance becomes support. A little bit of confirmation there on a falling wedge. And then let's go long. I think Solana looks good in that respect. Cardano's ADA. Same thing. We haven't broken the trend line. I would wait for a trend line to break. What's the point of adding? Is this right? ADA? Is that Cardano? Yeah, it's Cardano. Okay. So, we're below these lows at $1.12. If we get on the right-hand side of the trend line, okay, fine. Let's build a low and let's see if we have a recovery. But below the lows and on the left-hand side of the trend line, I have no interest in trying to buy more now. I mean, if it just goes lower, 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 why are you buying it? Wait for the trend line to break and then get long. All right. Any other cryptos? Trying to think. Ripple. Ripple trading at 73 cents is still hanging pretty tough around the 80 cents level. Tron. Not Tron. I didn't mean Tron. What was it? Luna. Luna USD. This one has been surprisingly bullish. We're up at 95 bucks. So this has had a great run to the upside over the last couple of weeks. That is a 100+% rally on Luna. So Terra Luna. And I believe this was the this is a stable coin current or crypto. Good stuff. All right, traders. Let's do this. Give me a little bit of a breather before my class at 10 o'clock. Any questions for me today? If not, we'll wrap things up. Like I said, next week, if you want to join me, I'm going to have 3 sessions next week. Let's do a Monday 9 a.m. session. Let's do a Wednesday 2 p.m. FOMC session. And we'll do a Friday 9 a.m. recap. Good? All right. Speaking of thumbs up, we've had about 70, 80 people watching. If you do me a favor before you go, please hit that thumbs up button for me and like the video. Help that algorithm support the channel. I appreciate it. And we'll have a triple whammy of Pulver Report next week, Monday, Wednesday, Friday. Okay? All right, traders. I'll let you go. Equities on Demand students, I'll see you in 8 minutes in class in the trading room. And have a fantastic Friday, great weekend, and I'll see you next week, everybody. Okay? All right. Real quick, I'm watching. Keep hitting that thumbs up button for me. We went 33 to 40. Let's get it up there. All right, buddy. Have a good weekend. Thanks a lot. Bye.